All right. Well, hello, everyone. Happy Monday. This is Scott Thompson, Senior Manager with Schwab Coaching. Excited to be here with you today. We got stopped out of one of our positions during the week last week, so I want to review that today. Also, take a look at a couple new opportunities because we kind of maxed out our positioning based on a $10,000 paper money portfolio. We're investing up to 5% of the portfolio in any single position, so we could have up to 20 positions. And we got stopped out of one, so that opened up a spot for another one. So I wanted to look at two examples today of new buy signals for our sample portfolio and go through that. Just kind of by way of announcement on the 28th, so in a couple weeks, we'll give an update for a live-only session where we'll give an update on our kind of ETF tracking plan that we implemented a few weeks ago. And so just I'll announce that for a couple weeks, and then we'll do that on the 28th of July. So if you can attend live, I know some of you listen to this on the recording. We don't record that live-only session, so if you're able to be here, that'd be awesome. But before we get going in here, let me remind everyone our presentation today is for educational purposes and not a recommendation of any different strategies or anything like that. We are implementing some strategies here today that we're using. When we do use a stop order, there's no guarantee that the stop will be executed near or at the stop price. And there's even in our paper money, we had an example of that, which I wanted to show you today. And then realize that all investing involves risk, and that includes the loss of principal. So let me go over here and share my thinkorswim page real quick and go over a few of the things that we're doing. Very first off is we are doing 3 different investing plans. One of them is where we're investing $5 a day. Theoretically, it's actually about $7.24 each trading day, and we're investing that in an instrument that tracks the S&P 500 and the NASDAQ 100. And we're doing that. I have that over here, and those are those ETFs that we can't show during our recorded session here, but I have been doing that every single day. It's really cool. So make sure to be here on the 28th when we give an update on this kind of in our live only session. But it's been really fun every day to go in there and essentially place an order for a partial share. Some brokers have the ability to do that where you can do that on your own. You can set it up automatically. One of the big advantages of, a new investor has is just time. And so, in episode 1, we wanted to convince everyone that one of the greatest assets that investors have is that time in the market. So we're demonstrating kind of how to do that using these tracking instruments. The second plan that we've been doing is to invest $50 a week using what's called Schwab stock slices. Now, Schwab stock slices, not a recommendation to use that or to invest in those particular instruments or stocks or equities in there, but Schwab allows you to actually invest it's a minimum of $5, and you can choose up to 30 stocks in the S&P 500. And what we chose to do is just use the top 10 holdings of those tracking instruments. So that portfolio is just right here. I did want to show you some of these things. None of these, of course, are recommendations, but what I want to do is go over here. You can kind of see the quantity of the shares. So we're investing $5 is all in each one of these each Monday. And, we're almost up to like a quarter of a share on some of these, but some of them are so expensive that we have very small partial shares. And look at this. If you come over here on your P&L open, if you click on this, it'll give you a history of your purchases. And so, again, this is something that you could automate on the Schwab.com page with Schwab stock slices and just do that every Monday on your own. I have to kind of manually force it because the paper money doesn't do that. But you can see, the 9th, 16th, 23rd, 30th, 7th, the 14th is I've gone in and just basically bought, in our example portfolio, a stock slice of Apple and Amazon and so on. And you can kind of see one of the advantages of doing this consistently, and this is true of that tracking system as well, is that your dollar cost averaging. So you can kind of see sometimes I bought some shares around 200. A couple last week it was up at 215. It's down a little bit this week at 210. But you can see that every Monday we've made a purchase in our account, and our average cost here on Apple's about 204, and it's trading at 208 right now. So we are in a profitable scenario right here, and because we don't even have one share, we're up about 62 cents. So again, it's just to demonstrate the process of getting started with stock investing. Is, how does someone who's new to the markets, how do they get started? And these are a couple ways that we've demonstrated. Then about 3 weeks ago, we introduced a trading plan. One of the reasons for doing this is if you wanted to be a little bit more active in your investing, is to come up with some guidelines and rules that you can follow to help you be systematic and consistent in your investing, which is one of the biggest keys, I think, to success in the market, is being consistent and being able to follow a set of rules. Now, I made a couple points. I make this point almost every time we talk, but if you haven't got this yet, get this written down. Is your ability to follow your guidelines or your rules is directly related to the comfort level of your risk with the trade you're putting on. One of the things that drove me absolutely crazy when I first started investing was I would see a buy signal, and then I would sit and fret and wonder and ponder and worry about whether I should buy that or not. And the reason is because I didn't want to lose money, number one, and I didn't want to be wrong, number two. But once I decided, okay, even with an absolutely perfect buy signal, I could still have a losing trade, right? That was a really weird sensation for me, is to accept that as like, hey, there's a perfect buy signal, but it could still lose money. Then I thought to myself, okay, well, if every trade I take has the potential to become a losing trade, then how much am I really truly willing to lose on that trade? And once I could decide that, and I'm encouraging you in your own investing is to decide, think about it. How much money are you actually willing to have on a losing trade? And I'll demonstrate that because we got stopped out of AT&T this week, and I'll go through the numbers with everybody. All right. But your ability to follow your guidelines or your rules is directly tied to that comfort level with the loss. If you're uncomfortable with the loss, then I don't care, what your rules are. In my experience, you won't follow them. So get comfortable with that. All right. So that's plan number 2, is to invest $50 a week in the top 10 holdings using Schwab stock slices. Again, not a recommendation to use that particular strategy or an investment. But we're just demonstrating some automatic or easy ways for someone to start as an investor. Now, plan number 3 is actually using this plan that we implemented. We call it 2 green arrows. Why do we call it that? Because we're using a 50-period moving average and a MACD histogram, and we've activated on the indicator itself, it says show buy or show breakout signals is the change that you need to make. I'll show you where to do that here when we look at the chart in a minute. And we're investing up to $500 per position, and that's because it's 5% of a mock $10,000 portfolio, okay? And so these are our example holdings. So let me scroll this down a little bit. These are the positions that we had. We got stopped out of AT&T, which I wanted to review, and then we went ahead and bought a new position today. And I wanted to go over that purchase and then also take a look at another buy example. So let's go first over here to the chart. I'm on AT&T, and let me show you very, very first how to activate. I saw a question in the comments earlier. And again, if you have questions as you're watching the recording, post those questions in the comments. I look at those every day. I'll respond to those and answer them. And so, but there was a question in there as well. What you talked about 2 green arrows, but you didn't ever show them. Well, I have been showing them, but here's a green arrow. Okay, let me change my drawing tool to just a pointer. But right there's a green arrow. And they're green arrows. All the green arrow means is if the price is above the moving average, that's green. Okay. Now, how do you get the green arrow? You go up to your studies, go to edit studies, and this will bring up your selected indicators. And right over here, if you click on the gear, now again, anywhere on thinkorswim that you see a gear like this, that's kind of a customizable place. You click that, and right here at the top, it says show breakout signals, and the default setting is no. Okay, so if it says no, let me show you that real quick, and we click apply, I don't have any green arrows on my moving average anymore. You see that? So if I want those green arrows, I have to go back up here, edit studies, click on the gear, and then show breakout signals. And now I have the green arrow on my chart. Okay. The MACD, same thing. This has red arrows and green arrows, and all that means is the histogram is going above that 0 line. And so this plan, cleverly named 2 green arrows, is when the 50-period moving average and the MACD have 2 green arrows. And this is important, when that moving average is rising, then we consider that a valid buy signal for our example trade. Okay. Now, sometimes they'll oscillate, kind of like over here, it kind of goes back and forth or trading very sideways. And we've talked about this in previous sessions, but if it's trading a little sideways and we have a lot of horizontal resistance, is what they call it in technical analysis, where it's having trouble getting above a particular price, then what we'll do is we'll usually wait for it to break out above or close above that level before we consider that a valid entry point. And that's basically what happened here on AT&T. We broke resistance on the 30th. I did this analysis after the market closed and thought, oh, okay, we have a valid buy signal. I have a green arrow on the stock. I have a green arrow on the MACD, and we placed an order, and that order got filled on the 1st. Okay. Now, if I go back to my monitor page, I just want to show you this here on the account statement. Is you can see we got filled on the 1st, and we got filled at 28.94, and our stop order was set at 27.36. Now, why did we do that? Well, at the time, you can kind of see, I made a little note here. The moving average was sitting at 27.64 on that buy signal day. If my cursor is there, if you look at the price right up there at the top, right there on the 30th of June, when we saw that buy signal, the moving average value was at 27.64, and our rule for this plan is to set the stop 1% below the moving average value. So at that point, we set the stop at 27.36, and we use that number of our stop and our purchase price to determine how many shares to buy, and we're risking $50, which is 0.5% of our $10,000 portfolio. And so now sometimes we'll run into a scenario where on a lower price stock, it might say, well, you can buy 25 shares of the stock, but we only can invest up to $500. So sometimes we'll have to lower the number of shares. And that's what we have on our example that I'm going to show you in a minute. Okay. So anyway, we bought the stock on the 1st of July over here. And if you have some questions, go ahead and chat those in. But, we got in there. What we hope, of course, is the stock continues to go up. Now, that doesn't happen all the time. And so I'm going to jump over to this other chart. And this is what happened. Okay, we bought it here on the 1st. The stock really just came down. It looked like it was going to hold that support level or that old kind of resistance level or area of about $28. Bounced around there for 3 or 4 days, fell below that. We got 2 red arrows this day. Now, I'll review the rule just so you have it, but the rule says if we get 2 red arrows, okay, so that means if the stock closes below the moving average and the MACD's red, then we're going to adjust our stop up. Okay, that's important. Adjust it up, and the rule is 3% below the low price of that third or that day that the stock closes below the moving average. Now, it's important to understand that we don't want to lower our initial stop, because why? Well, because that's the area upon which we based our risk. And if we lower our stop, then if we get stopped out, then we're going to lose more than maybe we're comfortable to lose. Okay. So anyway, there. I do see a question from Vicky about sharing the rules. I went over the rules in, I think it's episode 3 of the trading plan of that. I cannot share the document of the rules, but you can go back and watch those. And I did go over all of those rules, Vicky. And as you listen and as you kind of experience and practice, you'll get to know those rules. But I did go over those, and I think it's episode 3. So you can watch those and then just pause it and jot those down on your notes or whatever. All right. So this particular day, if I go back, Oops, let me not do that. This day, the stock closed below the moving average. We didn't hit our stop, and we had our stop at 27.36. Now, what's the stop rule or a thing that you need to remember? The stop order just triggers the order. There's no guarantee that we're going to get out at 27.36. And in fact, even in paperMoney, look at this. We got filled at 27.34. So we got stopped out a few pennies lower, and we lost a little bit more than we expected in this particular case. And so, this is just kind of a summary of what we did. We had 17 shares of this particular stock. We invested, again, up to $500, which was $491.98. And on this particular trade, we lost $27.20. Now, so that's a review of that particular trade. And so, that's how that worked. All right. Now, I wanted to go through this next example here is the buy signal. So, Vicky, we're kind of going over the rules here together as we go through this. Maybe Brett can find, the date of that episode 3, but it was basically 3 weeks ago. So whatever that is. So I wanted to look through Intel. Now, Intel here is kind of interesting. The stock was trading a little bit sideways, and the stock started to go up, making some higher highs and higher lows. And if we go back in time here, we had a red arrow on the MACD. So let's kind of go through this together. I'm going to get rid of my vertical line because it's kind of annoying. But right here, you can see the MACD's red. The stock gave a green arrow back here on the 16th of June. But the MACD was green also. But the moving average didn't start really rising until later. Okay, so, we're here, we go forward a day, and so now the question is this a valid entry signal day? You guys chat this in. Look at this. If you didn't own the 20 stocks that we already owned on this particular day, the 6th of July, or 8th of July, sorry, this, based on the rules, would be a valid, sample entry signal right here. The MACD just turned green. That's the day that the buy signal occurred. And, the stock had some resistance in that 22.75 area, and it closed above that up there about 23.50. Okay, now here's a question. Those of you that have been here with us, help Vicky and anybody else that's new today. How long is this buy signal valid? Okay, now this is an interesting question. Now you'll have to decide for your own trading, but in our plan, and I've said this many times, but our plan basically indicates that the green arrows are green until they turn red. Now, what I'm trying to do and what we've been doing in our example portfolio here is we're trying to act on the buy signal day, like the day the MACD turns green or the day the moving average turns green. That's the day that we're actually trying to buy these for our example portfolio here. But sometimes, in this particular case, I think we already owned, the 20 positions, and I couldn't buy this one that day. And so the next day, here's the questions that I want you to go through. Now, again, this is more specifically for Vicky. What we're doing is we're checking. Do we have 2 green arrows? Okay, stock price is above the moving average, so that's green. MACD, we just look over here to the right side. We're just looking at the most current status, and that's green. So if we didn't buy it on the 8th, we could still buy it on the 9th. Okay. How about we go forward another day? Okay. If we didn't buy it on the 8th or the 9th, are the arrows still green? And the answer is yes, they're still green arrows. So we could buy those. Now, obviously, we may have even thought, well, I would have really liked to have gotten in there about 22 because then I'd be making money already. Okay. Or Vic, sorry, not Vicky. So it's, there's still valid entry points. It's just the later you are in your entry, then basically what happens is you're going to be risking more per share than you might have been had you gotten in on the buy signal date. Now, that's not always the case because sometimes we'll get the buy signal and then the stock will consolidate or pull back a little bit. And I want to just jump forward to where we are today. Okay. So let me give you some we'll cover more of this as we go forward in our class. But for those of you that know technical analysis, this is a pretty classic little short-term bull flag. The stocks went up and made a new short-term high. We've got a 2 to 5 day pullback here. we're hoping as technicians that the old level high here, this old resistance level, and let me go ahead and maybe just put a little line right there visually, right in this neighborhood somewhere in here, $23, let's call it. Hopefully that old high, old resistance will become new support and we'll get a nice little bounce off of here. But the point is was this or is this a valid 2 green arrow signal or not? And here's the thing. So is the stock above the moving average? Okay, check. Well, yes. Is the moving average rising? Okay, that just means is the trend up. Okay, so how do I tell that? Well, let me again go to my cursor here. Let's look a vertical line. This particular day, okay, and I'm going to go back to my pointer here. This particular day, the moving average values, just look right up here. This number right there by, to the right of where it says simple moving average. If I put my cursor there, the moving average value that day is 2133. The day before it was 2127, 2121, 2107, and so on. So, I mean, visually we can see that that's rising, but if you had a question, you could just actually look at those numbers, okay? And the MACD is still green, so technically this is still a valid entry point based on the rules that we've established. The trend is up, the stock is in the 2 green arrow status, and we can place the trade. So let's go through this together. I'm going to talk through it right now, and then I'll show you, because I made notes on all of this just to make it easier, and that way everybody can kind of look at it and review those notes together. So the rule is to buy when there's 2 green arrows and the moving average is rising. We have that. We're just going to buy it at the current price. Now, when I did this, it was actually at 23.05. It's at 23.10 right now. But the rules to buy there, we're going to put our stop order 1% below the moving average. Now, the moving average value was at 2133. So let me move my calculator up over here a little bit. If 21.33 times, now how do you get your stop value? Take the moving average value times 0.99, and that will give you the stop price. So times, so 21.33 times 0.99, and our stop's going to be at $21.11. Okay. Now, again, I'm talking through this. I'll show you notes on it, so it'll be easier to follow here in a second. But if we bought this at 23.05 and our stop's at 21.11, so we have about $2 of risk per share. All right. What is that? So let's actually figure it out. 23.05 minus 21.11. So we're risking $1.94 per share. Now, how do we determine how many shares to purchase? Well, we can do this a couple ways. We could take $500 and just divide it into, $23, and that would tell us how many shares we could do if we just want to invest that. The method we're using first is we're saying, well, I'm comfortable in our paper money. We're comfortable risking $50. So we're going to take $50 divided by that $1.94. And it says we could buy 25 shares of the stock. Okay. Now, because I have a limited amount of cash, and because we also have a rule that says don't invest more than 5% of the portfolio value in any one position, we want to double check this. If I buy 25 shares of Intel at 23.05, how much is that going to cost me? Well, 23.05 times 25 shares, that's $576. Now, again, you might be comfortable putting that amount of money in the trade, but for our portfolio, that exceeds our maximum position size, okay? So what we'd have to do in this case is we say, well, that's really a little bit too much, and we could either quickly calculate how many shares we need to reduce that to be down by 500, or we could just do this. Take $500, our maximum amount of money, divided by the $23.05 purchase price, and that says we can buy 21 shares of the stock, and then we'll be under our max allocation. We'll be under our maximum comfortable risk amount of losing $50 on the trade, and then we could set up that order, okay? So if I go to the trade page then, and I say, I want to place this order, how do I do that? Well, I go right-click, buy custom with a stop. All right. And over here on my quantity, I can go in and place 21. Now you'll notice this little link right up here. If that's unchecked, you'll have 2 lines for 21. If you link it up, then whatever you change in the buy line will also get calculated into the sell line, which is what I like to do. I like to lock those up. That way I don't have 20 shares here and 40 shares here or something like that. All right, so 21 shares. And, you know, in this case, we placed an order to buy this at 21,305 is where that order was. And we said our stop was at 2111. And what do we need to do with our stop order? Well, we need to make our stop order good till canceled. So we're going to click on the day, change it to GTC. And this was the order that I placed a few minutes before the class started today, and wanted to review that with you. Now, if I hit confirm and send, and this is important, you know, right here, anytime you see a red line here, you know, with stop orders, no guarantee that the execution price will be equal to or near the activation price. So we're aware of that. This could gap over 21, 20, or 11, and we could get filled at 19 or 18, much lower than that price. All right. But when we check all the numbers, you know, we're good buying 21 shares, we're going to sell 21 shares. It's going to cost us $500 or $484. We just want to kind of double check all of our boxes. Are we investing enough money or too much money? All right. And then we just click send order. And that's what I did this morning. And you can kind of see I sent that order off this morning. Oops, that's not. Let's put INTC here. So Intel, we set the order this morning, got filled actually at 2302, and we have our stop at 2111. Okay. Now, note-wise, just so you guys have it and it's easier to see, I recorded all of that right here. All right. You know, the moving average went green on the 16th. We just talked through all of this. So this is just kind of written out what I said a minute ago. MACD was green on the 8th. We put the order in today, and I just went through those calculations. Risk per share is the difference between our entry price and our stop price. The number of shares, we could take our acceptable risk amount, which is $50, divided by our risk per share, which is the difference between the purchase and the stop. And that told us we could buy 25 shares, but that was too many for our $500 maximum. So we just took that last step, $500 divided by the purchase price, and we were able to get 21 shares. Okay, so hopefully that's helpful for you to go through how to do that. All right. And Paul's making a great comment in there. You know, when you place that order, you want to review the order. It says confirm and send, not just send and send, right? So confirm and send that order and be aware of that. All right. So that was the Intel example. Now there was one other. Now some of you may be, if you're new, you may be asking, well, what stocks are we trading? Well, we're trading the S&P 100. You know, it's a public watch list that's available. And so I just go through these basically every day. Unless I have 20 open positions, then I can't buy anymore. So I'm just reviewing them for the stop signal. But if you just go to watch list here, go to public and go down to the R through W, there's the S&P 100. And so we're just using that watch list that's public to show how to do this particular plan. Okay. All right. So the other one, and I found this and because we're doing on the monitor tab, remember, you know, one of our plans is to buy every Monday the top 10. I'm really trying to avoid buying Apple, Amazon, AVGO, these top 10 holdings in our 2 green arrow plan, just because I'm concerned that if I get stopped out of one of those, that it might affect our top 10 holdings. So the example I want to show is on Amazon, and I want you guys to go through this with me, and this will be our last example for today, and then we'll kind of wrap up our meeting. But if I go over here to Amazon, okay, I want to go through this together on Amazon and just walk through, and then I'll have you guys participate with me on this. And there is a survey in the link here. If you take some time today to fill that out and make a comment, I'd really like to hear from you what you'd like to see in the future. Again, remember, I'm a little constrained here on what I can cover because it's stock investing for beginners. So ask those questions that you think or you wish you knew, or you'd like me to go over when you first started investing. If you have some children or grandchildren that you'd really like to get involved in the markets, try to anticipate what questions they might have, and then ask those in the comments. I love to see those. Put those in the survey, and I'll respond to those in there. But I really appreciate your feedback, and it's great to hear from everybody. All right, so let's go through this. This will be our last example, then we'll kind of wrap up. All right, now the very first question, that I get asked is like, well, holy cow, you S&P 100, you're telling me I got to go through 100 stocks every single day? And my answer to that would be yes, if you want to, okay? But here's the key though, okay? Once you know what you're looking for, it takes literally seconds. You could go through those 100 stocks and probably, if it takes 5 seconds per stock, what's that? 500 seconds divided by 60 seconds. So like, what's that? 6 minutes or so, 7, 8 minutes. I guess it's 8 minutes. So you can go through those in 8 minutes to determine whether or not you have a buy signal or not. Okay. So over here, now the question is simply this: do we have a buy signal? All right. So everyone pay attention. If you're doing dishes, stop for a second. I want you to get this because it's important. If you're following a rule set, then you absolutely want to be consistent with how you evaluate your stocks. And this is a very simple rule set. And the question is, and let me change my drawing tool back here to my cursor. On this day, okay, this is the 10th of July. Is this a valid buy signal? Okay, so you guys chat that in. Is it a valid buy signal on the 10th on Amazon based on the rules we have for our example portfolio? Okay, the answer is no, it's not. Why? MACD's red. And that's all the analysis you have to do. Okay, now the next day, which is the 11th, okay, that's the 11th. That was Friday. And sometimes this will happen. We may have been looking for the MACD to be red for 6 or 7 days in a row, but guess what? It wasn't. So here we are on the 11th. This is Friday. Is this a valid buy signal day? Okay, so chat that in. On 7/11, is that a valid buy signal based on this sample investing plan that we're using on for the 2 green arrows? Well, the MACD is green. The stock price, now we don't see a green arrow in this little zoomed in portion anywhere, do we? So how do we know that that's a green arrow? Well, the price is above the moving average, so it's green. How long is it green? It's green until it goes below the moving average, okay? So now I have 2 green arrows. So could someone have bought this that day based on the rules that we just reviewed, that 2 green arrow plan? Okay, again, not a recommendation, it's just showing you the example, all right? So obviously at the end of the day on the 11th, that was a valid buy signal and we could have bought it there. Now here we are today, okay, this is today. Is it still a valid entry signal? Okay, so Vic did bring up a question. It's like, no, the moving average is not green. Well, it actually is. And I think I just reviewed that, but let me show you when it went green. The moving average went green back here on the 8th of May. So the 8th of May, technically it wasn't a valid buy signal because the moving average was falling, but we did have a valid buy signal here, okay, on the 6th of June. We had another valid buy signal here based on the rules on the 27th of June. And then we got another valid buy signal, again, based on this sample plan on Friday. So let's go through this together as we wrap up, okay? Now, if I wanted to buy the stock right now at 25, and so I'm going to jot down some things here that we need. I need to know my purchase price. We're just going to use 25.62. That's the current price. Okay, and that's going to change on us. So 225.62. Okay, we need to know where the moving average value is. Does everybody see that? On that day, let me put my little vertical line back on here, but where's the moving average value today, right now? Where is it? Now, conveniently, we have it on both places. We have it over here, 209.32, and we also have it there at the top to the right, 209.32. Okay, so I'm going to write that down on my notes, 209.32. Why do we need that? Well, we need that because we're going to set our stop below there. Okay, so let's go through this together. And I'm going to put a little text note on my chart. If I go to drawing tools and I can choose text note, and then we'll just fill this out together. Okay, so this is today, 7/14. The entry we're saying is at 225.62 we had on our notes. Okay, the moving average we said is at 209.32. And now we have the information that we need to kind of calculate this trade. So I'm going to go ahead and say, well, first thing I want to know is where's my stop order, or where's my stop? Well, we take 209.32 times 0.99. Okay, you guys figure that out for me. What is that? Okay, because I can't use my calculator when I have this text note up there. So someone chat that in. So we have 209.32 times 0.99, and I'm getting 207.22. Is that what everybody got? 207.22. All right. So now what do I need to do? Well, now I have my entry price and I have my stop price. I know how much I'm risking per share. What's my risk per share? Let's calculate it together. Risk per share equals purchase price, $225.62, and again, that's changing on us, 207.22. That's our stop. The difference between those is our risk per share. So 225.62 minus 207.22. I'm just using my hand calculator. So that's $18.40. That's our risk per share. All right. Now we have to determine, well, how many shares can I buy? And again, you can kind of eyeball this pretty easy. It's like, well, if I can only invest $500, I can buy 2 shares, right? But let me go through the exercise just so you guys know how to do it. If I was willing to lose $50 per trade, okay, I take my $50 per trade, and I divide it by that 1840. And again, just using my hand calculator, 50 divided by 1840, and I could actually buy 2.71 shares, which in some instances, we actually could do that because it's a stock slice or so. But in this case, 2 shares, and then we just want to check. We want to do our check. So I can risk or invest a max of 500 if I do, let's do this. So 2 shares times 225.64, and that equals what? 225.64 times 2, and that's like $451. So all of those check out, and if I put my little text note, I've got it set up to where it's just the text note, and when you hover over it, it'll show what's there, which is kind of cool. But if you wanted to see the whole note, go to Edit Properties, and you could say Display Mode. Full text, first line, icon. And I've got the icon, but if I wanted to see the full text, I could do that. Okay, so again, now that we've got the information all calculated, we want to remember what our stop is at 207.22, and we could go place this order. Now, I'm not going to do it because I've already got 20 positions with that Intel trade we just did. But if you wanted to place the order, this is what it would look like. Okay, Amazon. So what do we do? How do we place an order? Again, I know many of you are veteran traders. You've been here forever, and but if you're new to investing and you're new to how to do this, you just right-click on the ask price, do a buy custom with stop. Very first thing I like to do is adjust my shares. We calculated 2 was the appropriate number of shares. Hit enter, and those are locked up. The market's open right now, so we could do a market order, or we could place an order at our, what was it, 225.62 is what we did. But the price has gone up a little bit already. So, if we put a limit order at 225.62, it won't fill. All right. And then we put our stop price in here. We said, was it 209.32? What do we need to do next? Well, we need to make our GT, or our day order on the stop, good till cancel. That's what GTC stands for. And again, I'll just make that a market order for our example here. We click confirm and send. We want to review down here at the bottom. Market orders sometimes will change the limit orders depending on the volatility. Stop orders aren't guaranteed to execute at the stop price. That's just going to put a trigger in there and make it a market order. Could feel significantly lower. We double check our amount invested, 451. And if all that works out, then we can click send order. Okay. So that's what I wanted to cover today is to go over, how to implement this plan. It's a simple method of determining, how many shares to buy. It's something that everybody can learn and be real consistent with when you're doing your trading. We also went over, let me shrink these down here and then just move this down. We went over the plans that we're using. We're investing, $5 each day. I manually go in and kind of implement what would be an automatic investment for, many of you with your, depending on your broker. I'm implementing plan number 2 here, where we're just buying the top 10 holdings. We're investing $5 every Monday on each one, so a total of $50 in the 10 shares. And we can see that this is how those orders are placed over here, and it's simulating. It's simulating what would be happening if you did this using the Schwab stock slices, which again, we're not recommending that as an investing strategy or style. And then we did the plan 3 is just a little bit more active. If you want to be a little more active in the market and you're investing and want to have a set of rules that you're trying to follow, is buying, in this case, a really simple plan called 2 green arrows, 50 period moving average and a MACD. And we just set some parameters up that we can follow and be consistent with. And why is it important to be consistent in how much you're risking per trade and how much you're risking per share? Well, because we don't know which ones are going to be the winning trades, right? We got stopped out of AT&T this last week and lost $27.20, which is about half of that $50 we're willing to risk. And so, but it could have been much worse, right? We could have lost a lot, could have gapped over our stop. But the point is we don't know which ones are going to be winners and which ones are going to be losers. So we just want to be real consistent in that. Okay. All right. Now, I don't see any questions here that I missed, but I'll go back through there. The session is being recorded. I do see that from Dragon Rider. So thanks for that question. You can kind of see how the portfolio is doing over here. I've added the sectors that we're investing in. And so this is what I wanted to cover today. And again, kind of an announcement on the 28th, we'll do an update on our tracking, our S&P 500 and NASDAQ 100 tracking plan. We'll give an update in that. That'll be a live only part of the session. And also going forward, I wanted to do that today. It just didn't work out. But today, going forwards, we'll start doing some fundamental analysis, taking an in-depth look at, how a new investor might evaluate the value of a particular company. Is it overpriced or underpriced, or do we have to buy it at a premium, or do we get a little discount at it? So we'll look at that in future sessions. But thanks for being here today, everybody. Be consistent in your trading, and appreciate everybody's time. Please take a moment to fill out that survey and let me know what you think and how I can help you more. All right. Thanks, everybody. Have a great day.